Happy Monday, traders. Okay, so end of last week on Friday, we had some important US economic data. That was US CPI for January. Market was expecting year on year, the headline print to come out at 2.5%, year on year for core, also at 2.5. So the actual print came in for headline at marginally lower, 2.4. For core, it stayed at 2.5%. So look, it was a positive number in that inflation did marginally go lower, it did not go up. So we got a positive reaction in the market. So US bond yields, they did move. We had US 2 yields trading around about 3.48%, and they went down about 8 basis points, down to 3.4%. US 10-year yields, they were trading at about 4.13%. They also lost about 8 basis points, down to 4.05%. So almost down to 4%, big psychological level, and obviously breaking that would be obviously very good for risk again. So we're getting US bond yields lower. And so market reaction also in the equity space. Equities were struggling, US equities, before the number came out, but we did see a good rally, and they went from being negative, very negative, to pretty much closing square at the end of the session. For precious metals, they did struggle, had a big sell-off during last week, but on the back of bond yields lower, also US dollar lower, precious metals like both of those conditions. So we had a decent rally on Friday. Both gold and silver up 2.5%. Gold closing back above that psychological 5,000 level. So look, they after struggling, having a big sell-off last week, they did end the week very constructively. So it does open up some positive sentiment to start this week for precious metals, but oh my God, it's been a super volatile and dangerous market. In the currency space, we saw some US dollar selling, obviously on the back of the bond yields lower and inflation lower. Look, the standout currency, we've been talking about it all of last week, is dollar yen. There's been a lot of love for the yen again by Japan's story post the Japanese elections. And yes, it does have a high beta to US bond yields lower. So dollar yen finished the week just above the lows of the week, around about that 152.70. That's a good 600 points from its high at last Monday. So yes, market this week will be eyeing the 150 level at some stage, I'd imagine. So let's see if we get a test of that sooner rather than later. But the other, and a trade that quite like, is short Swiss yen. So Swiss yen actually last week, bearish key reversal away from record highs, and we had a bearish key reversal week at the end of the week. So technically, Swiss yen's actually looking a lot technically better than even what dollar yen is. So yes, staying short there looks good. And potentially we're going to set up for bearish key reversal month from record highs in the next 2 weeks. It's something to watch out for, and if that happens, it's going to go much lower. Anyway, look, this is a big week in markets, a lot going on, but we will probably start a bit on the quiet side. We've got here in Asia, China out for Chinese New Year's celebrations. They're out for pretty much the whole week. Hong Kong's obviously out as well. And they're out until Friday. US is also out today, public holiday, President's Day, so US markets are going to be closed and quiet. But Tuesday all kicks off. So Tuesday, we've got the RBA minutes. Last meeting, they raised rates, they were hawkish. I'd imagine the meeting, RBA minutes are going to echo those sentiments. So probably bias positive for Aussie. Wednesday, we do have the first meeting for the RBNZ for the year. Market's looking for them to unchanged rates at 2.25%. RBNZ did a lot of heavy lifting last year. They cut all the way down from 5.5 down to this 2.25, so 325 basis points. We could be at neutral rates, so the bar certainly is going to be very high for the RBNZ to cut again. So maybe you might see some the skew to being a touch more hawkish, that they are towards the bottom end of the easing cycle, if not there. So it could be positive for Kiwi. Then on Thursday we do have Japanese CPI. That's going to be important obviously for Bank of Japan meetings coming up, where markets expecting a raise at some stage soon, and obviously markets getting excited about reflation trade with like a lot of fiscal expansionary policy. So that's going to be important there. They've also got Aussie employment data on Thursday. Markets looking for the unemployment rate to marginally go up from 4.1 to 4.2. Look, that's still a very good number, so that's not going to take away from the RBA's sort of tightening bias at the moment. But then going into Friday, we've got some very important US economic data in the week. US PCE inflation data for January. Both headline and core year on year are looking to be very sticky and up towards 3%. This is the Fed's preferred inflation gauge, so it looks as if the PCE data and the actual CPI data we saw last week sort of diverging. They do calculate different some different components for inflation, and the PCE looks as if it's calculating ones that are obviously more inflationary. So we do have that at the end of the week, very important, and US GDP data as well, which should be quite buoyant. Other than that, we've got some geopolitical event is on Tuesday. We've got some meetings between US and Iran. Again, obviously tensions there are very high. Look, the key sticking point looks as if it's not on the nuclear side. Looks like Iran probably does want to compromise there, but they don't want to reduce their ballistic missiles, and that's something that may be a sticking point. But let's see what the headlines come out post that, but certainly that can be a market mover if the talks break down. So look, heaps going on in markets. Looks like another volatile week coming up, so good luck, and we'll check back in with you shortly.